Welcome to Target Zone. Today we're diving into one of the hottest financial topics right now, the US government shutdown and its impact on both the stock market and precious metals like gold and silver. This isn't the first time Washington gridlock has created waves in the markets, but the big question is, how much does a shutdown really affect your portfolio, your investments, and the broader economy? Stick around, because by the end of this video, you'll have a clear picture of what's happening, what history teaches us, and where gold and stocks might be heading next. So let's start with the basics. What does a government shutdown actually do? When Congress can't pass a funding bill, federal agencies close or scale back. That means hundreds of thousands of workers are furloughed, paychecks are delayed, and government contractors face uncertainty. But here's the kicker. Shutdowns also delay or stop the flow of critical economic data like unemployment numbers and inflation reports. And that matters because the Federal Reserve, investors, and businesses rely on those reports to make decisions. This lack of data creates uncertainty, and uncertainty is one of the biggest drivers of market volatility. Now, how do shutdowns usually affect the stock market? The answer might surprise you. Historically, the overall impact has been modest. In the 2013 shutdown, the S&P 500 actually gained about 3%. In the 2018-2019 record-long shutdown, stocks dipped a bit but then rebounded. On average, the median change in past shutdowns has been close to zero. So why doesn't the market always crash? Because investors know shutdowns are usually temporary. The real impact tends to show up in specific sectors. Defense and aerospace contractors who depend on government contracts. Healthcare companies waiting on Medicare, Medicaid payments, or FDA approvals. Infrastructure and construction firms relying on federal projects. Meanwhile, defensive sectors like utilities and consumer staples often hold up better. That said, if a shutdown drags on for weeks or months, the drag on consumer spending and business confidence can spread across the economy, and then stocks start to feel real pressure. Now let's flip to precious metals, gold and silver. When political uncertainty spikes, investors often look for safe havens, and gold is usually the first stop. Here's why. Gold doesn't rely on government spending or earnings reports. If the dollar weakens because of fiscal stress, gold often rises. If real interest rates fall due to slower growth expectations, gold becomes more attractive. In fact, during this 2025 shutdown, gold is hovering near record highs. Silver often follows a similar path, though it's more volatile because it has industrial demand too. The bottom line, shutdowns can create tailwinds for precious metals, especially if they stretch on and dent investor confidence. There's also a Federal Reserve angle. If the shutdown halts key economic data, the Fed has to make policy decisions while flying blind. Markets might expect the Fed to lean more cautious, maybe even delay rate hikes or consider rate cuts if growth takes a hit. Lower rates or expectations of easier policy usually mean weaker yields and a softer dollar, which once again boosts gold and silver. So there's this indirect channel where the shutdown's data blackout feeds into Fed uncertainty, which then ripples through stocks, bonds, and metals. So What should investors watch for? Duration. A few days, markets shrug, weeks or months, and it's a different story. Debt ceiling risk. If the shutdown morphs into a debt ceiling standoff, then we're talking much bigger consequences. Global confidence. If foreign investors lose faith in U.S. governance, we could see dollar weakness and capital flight. For strategies, diversification is your best defense. Consider safe havens like gold as a hedge. Avoid overreacting to short-term political drama, but do monitor sector exposure if you're heavy in government-dependent industries. So, to wrap this up, government shutdowns create noise, short-term volatility, and safe haven flows into precious metals. Stocks usually weather the storm unless the shutdown drags on too long or ties into a bigger debt crisis. If you found this breakdown helpful, give this video a like, subscribe to the channel for more weekly insights, and share your thoughts in the comments. Do you think this shutdown will last long enough to really hurt the markets? Thanks for watching, and I'll see you in the next video.